So I want to call the Coastside Water District regular meeting of the Board of Directors to order. The Tuesday, January 9th, 2018 meeting. Okay. And do the roll call.
Yes.
All right.
Director Reynolds?
Here.
Vice President Coverdell?
Yes.
Director Glassford?
Here.
President Feldman?
Here.
And Director Michelson is absent tonight.
Okay. Pledge of Allegiance.
Pledge allegiance
to the flag of the United States of America and to the republic for which it stands, one nation under God, indivisible, with liberty and justice for all.
Amen.
Okay. Public comment. Have we any green sheets from the public? Okay, hearing none. We'll go to the consent calendar. Are there any directors requesting any changes or pulling anything off the consent calendar or any comments on it?
I thought it was really interesting that the only reason that the Hetchy system doesn't look fuller is Calaveras. If we just fill up Calaveras,
20-some-odd% because of the construction.
it'd be really good if we could just fill up Calaveras.
Okay,
Another
That's all I
year.
got.
okay, other comments?
I move we approve the consent calendar as
Second.
presented.
Roll call, please.
Director
Aye.
Reynolds? Vice President Coverdell?
Aye.
Director Glassford?
Aye.
President Feldman?
Yes. Okay, meetings attended. Any directors have attended meetings? Have any comments?
Yeah, I'm on day 2 of a 3-day workshop on leadership in water utilities in Fresno. And other than the hand-wringing over the snowpack, I don't have much else to report yet, but I'll keep you appraised as I learn more.
Okay, other comments? Meetings? Okay. General business. Six A, accept the Coastside County Water District basic financial statements and independent auditor's report for fiscal year ended June 30th, 2017. Mary, do you want to comment on it?
So this fall, we had our audit, and I'd like to introduce Chris Brown from Fidek and Brown LLP. Just to provide a little background, this year we changed auditors. We have had the same auditors for 9 years, and for purposes of best practices, we decided to change auditors this year. So we found Fidek and Brown, and we're very happy with them and their staff. And so Chris is here to give us a presentation and to answer questions for the board.
Welcome.
Well, thank you very much. Let me just ask, are you going to advance the slides? Oh, okay, perfect.
I'll try to read.
How am I going to do this?
I'll try to read your mind, but
Okay.
if I miss.
I'll concentrate. Since this is the first time I've had a chance to speak before you, I'd kind of like to just go through the process. What is the audit? How are we doing it and such? Who's involved? Once again, my name is Chris Brown, engagement partner. The other individuals that are on the audit team are Mr. Charles Fedak. He's providing technical review services. He's my other partner. He's got over 40 years of experience, Big Fours and such, so there's a lot of experience there. Mr. Jeff Palmer is our supervisor. He leads the field work and assists in preparing the financial statements. And we brought in Mr. Alec German as the audit staff. So, go ahead. I also kind of like to go over what are the requirements, what is an audit, and such. State law requires that the district have an audit performed by a qualified CPA. So it's a rule, it's a law. You must have this. What happens with it? Basically, the audit report needs to go to the state and any other civil entity that requires that, creditors and such. You're also required to submit what's called a state controller's report to the state itself. That's how they officially track their activities and financial results. The audit itself, what we're really doing, okay, is we're determining whether the financial statements are free of material misstatements and prepared in accordance with generally accepted accounting principles. We're not really here to get into your business as far as the qualitative, it's more the quantitative. We're testing the transactions and we're looking at the report to make sure that the transactions are properly recorded and you're reporting them correctly. Go ahead. Professional guidance. The audit process is governed by statements of auditing standards in both federal and state requirements. Statement of auditing standards, basically a compilation of guidelines. AICPA has a big part in establishing that. They're the requirements that we must follow when we're conducting the audit. If we fall outside of that, we get in trouble, essentially. We are audited as well, okay? So not only are we auditing you, but every 3 years, the auditor gets audited. An auditor will be selected and will come in and audit some of our engagements that we've worked on. And if we're not in compliance with those auditing standards, we will get an auditor opinion that is adverse. Okay? So it's very important that we follow those standards. Okay? Mentioned GAAP, Generally Accepted Accounting Principles. In your case, a governmental entity, it's GASB, Governmental Accounting Standards Board, is the policy setting entity itself. As far as the audit, it's broken up, as far as the timing of the audit, physically being here and such, broken up into 2 time periods. There's the interim field work and final field work. Interim field work is really just sets the base of how we're going to conduct the audit itself. The audit is what's called a risk-based audit. It's a requirement, okay? Essentially what we're doing is we're coming in and we're looking at your controls. We're assessing how you're doing things, both documented and just by practice. We're comparing that to best practices throughout the industry. So essentially, we're gaining an understanding of the control framework itself. Okay, so we have to assess that. We have to determine whether there are any weaknesses in that. We're also testing controls. We're looking at the various accounting cycles, your purchasing and disbursements. Are they properly authorized, both for purchases and disbursements? Your revenue, are you properly calculating the bills? Okay, I know there are many different aspects of revenue, but are you calculating these amounts correctly? Are you collecting them correctly? Are you recording them correctly? Payroll, everything involved with payroll. Are you basically following the right procedures with regard to that? When it's all said and done, basically what we do is we go back and we assess the risk. We determine what areas within the organization's operations we feel might need more work. Which areas might we rely on your internal controls? Okay, more, I should say. We develop the audit programs, and basically the audit programs are a listing by area. I'll just give you an example: cash, receivables. Basically, the process we're going to go through, the steps we're going to take, how we're going to look at things, what our expectations are when we're doing our final field work, which is the next item down. After your year end, we receive the trial balance, and we're essentially tying in the numbers. There again, cash is the easy one to go with. Cash is tying into the bank reconciliations and your bank statements. So that's kind of the process. Okay? Good. 2 reports that you're going to get out of this. Basically, there's the annual report, which contains the auditor's opinion, and the management report. Management report is the auditor's communication to you, those charged with governance. Go ahead and go to the next one. Just real briefly, keep in mind that you're my boss. The board is my boss, not management. My job is to make sure, for your sake, that the financial statements are properly recorded, basically, that you don't need to worry about that. So I answer to you ultimately, okay? The management report deals with several things. Amongst them, the first part of the management report is a section where we will enumerate any deficiencies that we come across. And you can see here from this slide that we did not identify any material weaknesses within the district's internal control structure. So congratulations. Yes, yes. Other part of the second part of the management report basically deals with these bullet point items here. Our responsibility basically maps out what we're doing. The scope of the audit, qualitative aspects of accounting practices, and what that's really saying is Are you adhering to those pronouncements, GASB pronouncements properly? Management's judgments and accounting estimates. Are you depreciating your assets properly amongst many others? Go ahead and go to the next one. Corrected and uncorrected misstatements. In the back of the management report, you'll see a listing of any journal entries that were made to the trial balance as presented to us. You can see management's consultation with other accountants, difficulties encountered in performing the audit, and disagreements with management, and there were none. We were in agreement in the application of the GASB rules and such. The next item, going to the actual financial statement, inside that is the auditor's opinion. It's a clean opinion, unmodified, and it's, in our opinion, the financial statements referred to above present fairly in all material respects the financial position of the Coastside County Water District as of June 30th, 2017. So congratulations on that. Okay, go ahead and go to the next one. Okay, this is a little bit harder, so I'm going to have to kind of back up because I don't have my good glasses on here. Pardon me, just one moment. I'm not going to go into a lot of detail. My understanding is that the Finance Committee met and went over some of the basic numbers. What you're seeing here is the condensed statement of net position, what that is on an aggregated level. Major categories are grouped together. Your assets are grouped together, liabilities, net position, and such. And from this you can see, and I'll just go with kind of the big categories here. Total assets actually increased approximately $6,298,000. And I'm going to go ahead and round some of these numbers out here. Liabilities increased the $4,355,000. You took on additional debt, construction.
What does the as restated mean?
Okay. I was going to get to that in a moment, but I'll go ahead and hit it now. When we came out to do our field work, we assisted in the calculation of the GASB 68, that's the pension liability calculation, okay? What we noted is, since this is the first year, is we went back and took a look at last year's calculation as well, okay? And using the CalPERS template, came to the conclusion that there was an error in the calculation in the prior year. When there's an error of that nature, of a material nature, first verify that it's being done correctly, which we did. And there again, if it's material, in the prior year, you do what's called a prior period adjustment. And that's what that restatement reflects. Basically is going back and showing the numbers as it should have been in the prior year. And in your case, I think it was, correct me if I'm wrong, it was approximately $650,000 to the good adjustment in your favor with regard to some of your deferred outflows.
How do you like that?
Yeah.
To the good.
Yeah. So it added to your bottom line. It isn't considered a revenue. It basically is going to your net position. It's not running through.
So in your process of the audit, you found a misstep of $650,000.
Correct.
It got corrected. Everybody in the team agreed that this was the right way to redo it. And so then the numbers were published forward with including a retroactive correction.
That's it exactly. Yes, correct.
While we're talking about the deferred pension outflows and inflows,
Sure.
can you explain what the deferred part means? I mean, I know that we contribute to PERS for all of our employees based on payroll and so on. But how does this differ from what we send PERS every month?
There's a timing difference from what you send every month and how it is being applied to the liability and how it's being reported. I could take a day and a half to go through this, but essentially, with regard to GASB 68, which is your pension, there's a 1-year lag, okay? Because of the nature of the actuarial valuations, the time it takes to do these, essentially what is happening is they're taking an actuarial valuation, and CalPERS is doing this, from a year ago, using the year ago measurement date, and saying the liability that existed on the actuarial, okay, is what you're going to put on the books in the current year. This is one of two situations where this type of event happens, okay? This is very unusual. GASB 75 is going to also do that as well, and that has to do with your other post-employment benefits obligations, and that will be next year. But essentially what you have is a lag between, in this situation, deferred pension outflows of when you send the money in and when it is applied for your financial statement purposes to that liability. So in essence, that $1,726,000 that you see here, that doesn't only include amounts that you've paid on behalf of the employees. That also includes things like changes in assumptions in the actuarial valuation, differences between what CalPERS expected to earn on their investment and what they actually earned. That also goes into that number as well. Next year's valuation will essentially take this $1.7 million and apply it to that liability. Okay. Conversely, if you look down a little bit, deferred pension inflows, it will essentially have the opposite effect. Those are adjustments in the opposite direction. I know it's kind of odd when you think of it that way, that yes, there is this kind of a delay, but that is the nature of the pronouncement and the correct way to apply it. So if CalPERS could generate these reports in a timely manner, in a real-time way, and say at June 30th, in your case, you know, basically provide it to you, it could be in real time and all these amounts could be properly applied, but there's no way that they'd be able to do that at this time. So you have this lag. Kind of taking it a little bit further, I mentioned GASB 75. It's going to be, it relates to your other post-employment benefits, health care, things like that for retirees. They're changing the way it needs to be reported. GASB 75 is going into effect in 2018 and essentially going to do the same thing. You'll basically make an adjustment to accrue this liability as it stands at 1 year ago. I know, kind of confusing there, but you currently have a liability. I'm going to try and draw, if you Mary, a little bit. Is it approximately $800,000 is what's being accrued right now? Okay, so what is happening is, in the past, and I'll make this very brief. In the past, what was happening is you had a period, let's just say 20 years, and basically you had an actuarial valuation done, and they said, here's your liability looking out this time period. We're going to basically accrue a steady amount each year until we get to that point, okay, 20 years. That's a very simple-minded way. It's more complicated than that, but that's just the easiest way to look at it. Well, what GASB 75 is going to do is going to get rid of that yearly timely implementation and say, no. Okay, we're going to basically, you're going to have this calculated and you're going to put that liability on the books. So my estimate is next year your liability will go up and it'll be reported very similarly to what we're seeing for GASB 68. You're probably going to have more deferred inflow and more deferred outflow showing on your financial statements. I'll be more than happy to work with you if you desire any sort of workshops or anything like that to go over this during implementation. I'll be more than happy to meet with management and the board if you wish to go over it, because it's going to be another big item. And if you're on other boards, you're going to run into the same thing as well. Okay. So I just took your simple question and I just ran around the block a couple of times. So
at the end of the day, it has no material.
I'm glad you said that. I'm glad you said that. It has a material effect. It puts the liabilities on the books, but it isn't cash out of your pocket. Let's put it that way. It isn't going to affect your cash flow today. It's basically recognition that this liability exists.
Right.
Will you need to fund it? Eventually, yes. Okay, how you decide to do that, whether to go the way you're doing it now, on basically pay as you go, or whether you determine that if you have funds that can be allocated to it, putting it aside in a trust, essentially, it would need to go into a trust.
Something we have to keep in mind. But you say this is really something that results from the CalPERS process in terms of the way they do their report.
What's really driving it, CalPERS is kind of a reluctant victim in this whole thing, okay? They're just the pension fund holder processor. This whole change is being, it was kind of being thrust upon them by GASB, Government Accounting Standards Board, that says, okay, pension funds, you need to do this. Governmental entities that have pensions, you need to do this as well, and everybody basically needed to fall in line and apply GASB and put it on their books. So,
Thank you.
okay, moving forward, net position, it's basically your assets minus your liabilities, deferred outflows as well. It's essentially your net worth, what's left over. Okay, it's not just cash, it's basically the value of your assets over your liabilities. One item that I tend to spend more time looking at over a longer period is I tend to look at the unrestricted number, which is at the bottom there. What I like to see when I'm doing analysis, and it changes from year to year. I mean, there are things that happen during the year that, or a number of years, construction projects and such, that can have effect. But what I like to see is progress to the positive, and we do see that in your case. You basically went from the, credit balance of 652,000. I shouldn't say credit balance, negative balance of 652,000 to 2.9 million. So positive movement in that area. All righty. I'll go over this. And again, in the aggregate, what we're looking at here is the condensed statements of revenues, expenses, and changes in position. They're again aggregated numbers, all operating revenues combined together. As a matter of fact, this table is going to be in your financial statement, so you will see this in management's discussion and analysis as well. And what we're seeing here is essentially net position increased by, I'm going to, there again, round, 2.8 million. Net position, change in net position is essentially your net income. Okay, and you can see it right here in this column here. So it's your revenues minus your expenses. So what I wanted to say, increase approximately 2.8 million as a result of ongoing operations and the effect of the prior period adjustment. You asked about that. That 600,000 is basically going into that 2.8 number. Okay. Total revenues, both operating, non-operating, increased to 1.56 million. Operating revenues, what you do for a living, selling water and such, increased 1.269 million due to increases of approximately 1.25 million in water consumption sales and 19,000 in other charges and services. Non-operating revenues, things that fall outside your normal operations, decreased 113,000, primarily due to a decrease of 184,000 in transmission and storage fees, which is offset by about 34,000 in property tax, 17,000 investment earnings, and 11,000 in rental revenue. Total expenses increased approximately 141,000, a little bit more than that. There again, operating expenses, things related to your day-to-day operations, decreased 35,000, primarily due to a decrease of 178,000. Source of supply, offset by increases in about 40,000 pumping costs, 83,000 transmission and distribution, 20,000 in general administrative. Non-operating expenses increased approximately 110,000, primarily due to change in interest expense from one year to the next. Okay. As I noted previously, could you go to that prior slide again? Actually, I really don't need to spend time on this. I did mention the unrestricted, the increase of approximately 3.51 million. So kind of what I'm taking away from this, the whole process itself is it went very well. It went fairly smoothly. Kind of did it in a compressed time. I would expect that we would have staff out here early in the year, and most likely this presentation would be before year end next year. No material weakness noticed or noted. Of course, we're always vigilant to best practices, and we'll bring those to you as we identify those as well. There again, Jeff Palmer was the supervisor on the engagement, and he would like to extend his thanks for everybody that was involved. He said, thank you very much. Everybody was very cooperative, timely in their responses as well. So thank you very much. That was a long...
Any comments or questions?
I have a question.
Sure.
I wondered if you knew that the auditor prior to you was here for 9 years.
I wasn't aware of that.
And so it's great to know that you've come in and you've found things to be pretty well in order. The most frustrating part of working with the last auditor, and I hope we don't experience it working with you, is it looks to me like the district is doing a fantastic job managing its assets, resources, income, expenses, and recording process. But we can't ever get an auditor to write a letter that says, great job by the staff. And I'm just wondering if your firm is more relaxed in that approach to reviewing a group and reviewing the auditing
He'll
practices.
beat you up on this next year, so you'll have
Um,
several years to work on your
I'm curious.
response on this.
Well, I'm not quite sure, what do you mean exactly?
Well, it always seems to me like there's a neutral opinion. We've found no problems. We've found no
I see what you're saying.
discrepancies.
I see what
You
you're
know,
saying.
it's a negative approach to an evaluation.
That's it exactly.
He
Yeah, it's
wants a
it's
certificate
like a
suitable
punish-
for framing.
It's like punishment for a job well done, and I just, for me, it's a really strange concept, and so I don't understand that.
Yeah. I guess it's one of those things, it's hard to quantify quality. How do you quantify quality?
Well, when you see a good job, you simply say, good job.
Good
That was
job.
a Good job. In writing. In writing.
I'm not going to put it in a report, it's your report. But good job. Okay. Yes, I'm a straight
Do you
shooter
have
when it
that
comes to
on
these
tape?
things. Yes, everybody's going to hear that one.
You're going to want to replay that.
You guys follow an audit process and
Yes,
template.
yes.
There's a template for this, which
It's-
is established by the government and other
Correct.
financial people, and it doesn't allow for that. That's not what the template.
It doesn't allow for subjective
Right.
matters like
You have
that.
to follow the steps and the rules.
And
You may feel it's okay, but
Council will
it doesn't
agree
ask
that-
you to say that.
Yeah,
You're
council
not
will
allowed to
agree.
say that, right?
Yeah, no, you don't really want to put yourself in a situation where you're verifying something that you can't verify. There again, quality is hard to quantify.
So I guess at the next convention, this will have to be a discussion, the philosophy of how we
I'll bring it
review
Gatsby's
audits.
attention.
Use his name.
Other comments?
Yes, please. On page 7, under current assets, you list bond issuance costs net, and I'm wondering why bond issuance costs are considered an asset.
I believe, I'm going to need to have Mary verify. I believe it relates to prepaid surety.
Prepaid insurance.
Prepaid surety insurance on the bond issuance itself.
It's a pretty small amount.
Yeah, but why is that considered,
$35,000.
why is that considered an asset?
Well, it's.
like a
net,
prepaid asset.
It's prepaid.
Oh, okay,
Yeah.
okay. And-
Several years ago, actually, everything, all the costs associated with issuing debt would have been recorded as an asset. But recently, I believe it's basically only that surety type of insurance will qualify. Everything else was required to be written off.
It just seems counterintuitive that you're paying out money and it's considered an asset.
Prepaid. It's like prepaying your insurance. You amortize it over the life of it. Yeah.
I write a check, it's not an asset.
Kind of the idea is if, you pay out $100,000, if you cancel the policy, would you get a rebate? Quite possibly. You would get money back, okay? I don't know if you'd exactly get that in a prepaid insurance situation. That's kind of the concept.
Prorated.
Okay.
Yeah.
Under capital assets, on page 20, it specifies pump station Crystal Springs, and I didn't see anywhere about Denniston as an asset. Is that included, or?
The Denniston will be, actually, we're not spelling that out in here. It's included under treatment plants. The pump station for Crystal Springs actually includes, with the specific costs that we, paid out.
Is that because of how we financed it?
Yeah.
That it has to be separated out?
Well, your legacy from 1988
Right.
with having Crystal Springs, having it being its own, own district.
Okay. So it's not so much that Denniston's not included as much as it is, we've got a
Right.
legacy situation
It's a
with Crystal
legacy
Springs. Okay.
situation.
I think, was that it? Other than to follow in Ken's footsteps and congratulate staff on a great audit, I'm obviously always pleased to hear there were no material weaknesses, but I'm also always pleased to hear that internal controls are strong, for the obvious reason of you want that in any public agent or any agency, but also because, in my opinion, the biggest thing about internal controls is it protects our staff.
Yes.
And so I'm always pleased to see that internal controls are strong, and that's it.
Glenn, anything else? No. I want to say that I appreciated the presentation. I thought it was helpful to have you walk us through this in this manner. I'm not sure it's the way we've seen it in the past, but this one was better. Only
Thank
in
you.
as much as gave us a clear structure. I didn't have to go and keep looking through pages. You actually covered all the germane issues for me. So that was, I think, a positive change to the good, and so I want to thank you for adding some value to the audit this year, which helped me understand it better, and look forward to our next go-round, and also appreciate the findings as being positive as you found them. Thank you.
Thank you very much.
Ken?
And I also found no material weaknesses in your presentation.
But don't
Thank you very much.
But we may adjust that.
How you
next year.
quantify, no, wait a minute.
That may be adjusted next year.
Okay, prior period adjustment? Yeah,
Right.
thinking back.
Deferred.
Yeah.
Management objective.
Thank you. Thank you.
All right, thank you very much.
Sorry, did I step on your toe? Were you ready to say something?
I was providing support for your.
Oh, thank
your-
you.
Next thing on the agenda.
We need a motion?
Oh, do we?
Oh,
we have to-
sorry, we have to approve it. I'll make a motion, we accept the
All right,
auditors.
I'd like a motion to accept the auditor's report.
So I make such a motion that we accept
Second.
the auditor's report.
Seconded, roll call, please.
Yes.
Director Reynolds, Vice President Coverdale.
Aye.
Director Glassberg.
Aye.
President Feldman.
Yes.
Thank you.
Thank you very much.
Thanks for coming out.
All right.
Where's Cyprus?
Travel safely.
Down by Orange County.
Ouch.
San Bernardino. Cyprus, where are we?
I know it's Orange County someplace.
Yeah. Okay, item B, approval of First Amendment to Communications Site Lease Agreement with T-Mobile for facilities located on Miramontes Point Road at Poppy Lane in Half Moon Bay. Turn that over to...
Okay, we have a number of cell site leases. One with T-Mobile. We started out with Metro PCS, and they were taken over by T-Mobile. We have a communications site leasing consultant, Aaron Levinson, who does a great job of tracking these sites, and every time they want to do anything, we charge them more money. So that's good for the district. They don't, some cell companies go along with the process a little more cooperatively than others. T-Mobile has been good, but we have very strong terms thanks to a collaboration between Aaron Levinson and our counsel, Pat Miyake. We have very strong terms in these agreements. And here's an example of some of Aaron's work. T-Mobile wants to put different antennas on its cell tower. All of the companies are going for more and more capacity, so they're always back wanting to change out their antennas, and every time they come back, we charge them more money under the terms of our agreements. This lease started out in 2008 at $1,800 a month. That has now increased to about $2,560 based on a 4% annual escalation. These new antennas under this amendment will get us an additional $850 per month, which will, once they finish the modifications, be added into the base rent and subject to the same annual escalation.
So it's going to start out at about 3,400 and
Yes,
change,
right.
and then go up 4%.
And as I pointed out in here, this agreement in 2008 was basically a 20-year agreement, 5-year terms which are automatically extended up to 3 times at the option of the leasee. Cell companies generally invest a lot of money in these sites, and they're important to them, so even though they might have the opportunity to end the contract, we generally would consider the term as being sort of the maximum number of renewals available. So we have this amendment. and we're asking the board to approve it.
And
I wondered if we could write into the agreement that they decorate these trees for Christmas, maybe light them up. Maybe not.
maybe not, because they're supposed to be obscure.
Oh,
Supposed to be,
well, did you look at them? Do you think that's obscure?
Also, it would
well, no,
attract
you look
rain.
at them on.
It's the biggest tree in the area.
They're the weirdest looking things I've ever seen. It's
If
like
you-
Dr. Seuss made
Big
a
piece,
If you decorate them, it could attract reindeer, and that's a sanitary health hazard around the water tank.
That would be a problem.
Do we get any
I
public
stand corrected.
feedback at all from any of these?
There's been, well, you remember the case of the AT&T proposed cell site at El Granada Tank
Sorry.
1? That was,
It's the biggest meeting we had.
Before my time, I'm glad to say.
yes, that was that proposed site was the only instance of public feedback we've really gotten. In this case, you have to look really hard to find this thing on the hillside up above the Alves tank. But we have built into the, first of all, the cell site companies are required to go through the counties or the cities, and I think in almost all of our cases, it's the county's permitting process that involves noticing and the opportunity for public hearing. So people have an opportunity to object at that point. We also built into this amendment some language that should protect us if we have folks objecting to the appearance of these new antennas. But they've provided us, as you can see in the attachment, with simulations of what it'll look like. It's not going to have much of an effect. So we've never heard anything from anybody about this site. It's pretty, even though that if you stood up close, that thing looks pretty fake. It doesn't really stand out on the ridge.
How come their
We call,
drawings,
we call it a
Lights up there, it'll
we call it a monobush. Yeah,
how come their drawings call it a Ritz water tank?
Yeah, right, I was gonna ask him.
that's just their terminology.
Does the Ritz own that land?
No, they just called it the Ritz. I don't know why they called it the Ritz water
It's
tank.
the Alvis tank.
Yeah, it's yeah, they didn't necessarily use our. There's no ambiguity in terms
because it's close to
of
the
where
Ritz
the
parking
location
lot.
is. Could
There's a
be,
lot there where they park their employee cars.
right.
Maybe that's why.
I'll make a motion, we approve the contract.
Have a second
You bet. Yeah, we're starting to make some real money
roll
on
call,
this.
please.
Yes.
Aye.
Miles, Vice President Coverdale?
Aye.
Director Glassberg?
Aye.
President Bowman?
Yes. Next thing on the agenda, agreement with Raftellus Financial Consultants, Inc. for fiscal year 2018-19 water rate study. Mary, you want to brief us on that?
So we are about to launch our fiscal year 19 budget and rate setting exercise. And so we are looking once
Favorite
again.
time of
My
year.
favorite topic.
Yes. And, with this, with this exercise, we need to confirm that our rates are consistent with the cost of service analysis and the rate study. And so we, particularly at our, our council's suggestion as well, over the years, we've gone out and had a rate study. So our current rates are based on a study that we did. We started with 3 years ago when we revamped our rates. Then we have, had our rate consultant review and revalidate and update the rates over the last, 2 subsequent years. We feel it's time really to take a fresh approach. And we are, we're looking for, potentially looking at what are the opportunities for alternate structures, can we make things simpler? And so we actually went out in December and talked to a couple, consultants, and the one that we really, we thought would be a great person to work with is, his name is Sanjay Gar with Raftellus, and I do have bios I can share with you, but we have He is actually one of the leading experts in developing rates, and he's been one of the leading experts in developing, providing recommendations on the conservation front. He is a regular at conferences, Aqua. He has written, I think he co-wrote one of the new rate guides in the M1. So he's very, I say he's very well-known in the industry, and he was just very, very fresh and willing to, consider, work with us in considering other alternatives. He's also done work with Alameda County, and so, many of, in Santa Cruz, Scotts Valley, East Bay Mud. So he's very, say, well-known in California. So we are interested in having this, firm do the study this year. And so he presented us with a proposal of $52,725, but this is time and materials. It's, our last year's proposal was around $40,000. This includes $14,000 for workshops with the board, and we can see how that goes with, in terms of what we want to do. But what we'd like to, initially, what we'd like to do at least is have a kickoff meeting with Sanjay Gar next week, and then we would likely have one workshop with the board, toward the end, and we would decide what we'd want to do, at the meeting next week in terms of scope. But again, we are, we're excited about the possibility, of working with Sanjay Gar. And I don't know, Dave, do you want to add anything of your thoughts of, when we met with him? He's.
I think the board will find him really interesting, and we're looking forward to a good rate-setting process. I think that as you'll hear when Mary gives you the financial update, we're in pretty good financial shape in terms of our revenues and our reserves. We think that gives us an opportunity to restructure our rates, and the restructuring always shifts costs from one group of customers to another, that it gives us the opportunity to restructure and potentially simplify our rates by going from 4 tiers to 2, for example, without having an undue impact on any particular group. Last year we made a little change. We didn't change our base rate. We think this time around we can go further in that direction, shift costs within our rates, and not have them. We can get by probably with a very minimal rate increase. So in redistributing our revenues across the customers, we can have less of an impact. So that's what that's kind of our agenda for this overall process. And it'll be important for the board, I think, to give us some input, and that's what we've built in. And we, in talking to Sanjay, we were really impressed with how he came up with suggestions that related to processes and what other agencies have done. So,
Comments?
Well, we had a meeting, the Finance Committee, and we went over in great detail. And we did sort of question the idea of, do we need 3 big meetings? And I don't feel like we do. I don't think I want to go through 3. But I think it is smart to have a kickoff, and I think there's probably smart to have at least one where we really go over, the conclusions or the suggestions, however we want to work that out.
Right.
But I think that will help us save a little bit of the cost as well. And then the only other thing we talked about was buying you movie tickets during the discussion nights.
Buying you what?
Movie tickets.
Why?
Well, so that, while we're discussing the rate setting. Maybe
Oh, yeah.
Star Trek.
Not I.
It was just an idea.
I wouldn't miss it for the world.
I'm excited about the change because I think the
Well,
board
he's looking to
and
change,
staff
sure.
has been trying for several years to
Moderate.
look at creative approaches
Right.
that are legal, and it hasn't always been an easy road. So I'm looking forward to having somebody who has the reputation, at least, of, and who you have confidence in, has the ability to maybe look at things a little bit more creatively and get us to our goals. So I'm all for it. I think it's a great idea.
I've been exposed to some of his work and thumbs up, so.
Oh, good.
I saw him in Akron, giving a presentation. Well, so the meeting you referred to, the kickoff meeting, is the one that's scheduled now for the 17th. It's a special meeting next
Next week.
Wednesday. Is that correct?
Correct.
Okay, so that's the first meeting. And then he kicks off from there, and then later we decide, we have at least probably one additional meeting to see what's cooking, and then check to see if we need any further ones for the board, which I think Ken is questioning as well. And that may reduce the total time and materials by enough to make it competitive with last year's cost. Correct? Okay?
So
Sounds good.
I'll move that the board authorize the general manager to execute a professional services agreement with Raftellus Financial Consultants to provide a water rate study for 2018-19 at a time and materials cost not to exceed $52,725.
I'll second that.
Okay, roll call, please.
Yes, Director Reynolds,
Yeah.
Vice President Coverdale.
Aye.
Director Glassberg.
Aye.
President Feldman.
Yes. Okay, next item is agreement with Cornerstone Structural Engineering Services Group for seismic evaluation of valves tank, AKA Ridge Tank.
Okay, that's tank, yes. That sounds a little better, maybe we ought to rename it.
It should go on their balance sheet, not ours then.
Soon to be reforested.
Okay, the Alves tank is our biggest, it's a 2 million gallon tank. I don't know if anybody's driven down by Moon Ridge and looked up at it, but it's pretty ugly right now. It's in kind of deteriorated condition. It was built around 1970, designed by district engineer Jim Teeter, constructed by Chicago Bridge and Iron, and it has for quite a while been time to rehabilitate the tank. And at the suggestion of our consultant, Jubin Pakpur, who's done a lot of tank rehabilitation designs for our peer agencies in the region, we're starting with a seismic evaluation of the tank. That's become a pretty common best practice in rehabilitating water tanks. Every time, since 1970, seismic standards have changed, whether it's buildings or water tanks or whatever. AWWA has a standard for water tanks, and that'll be the standard for, it's not, it doesn't have the force of regulation, but it's an AWWA standard for water tank seismic performance. And so Cornerstone will evaluate the Alves tank against those standards and give us some alternatives as input for the rehabilitation design. And we looked at examples of their work done for Pearson Hills Water District, where they modeled the seismic performance of a tank and gave a number of recommendations. One of the big things in the new standard is to make sure that in an earthquake, the sloshing of the water inside the tank, the force of the sloshing doesn't exceed the strength of the roof, because there have been instances where in an earthquake a roof will fail, and that can lead to failure of the tank. The ultimate risk with a water tank in an earthquake is that the tank will fail and release its contents.
Yeah.
And that's never a good thing, especially when it's 2 million gallons of water. So this is a very good thing for us to do. The cost is about $40,000. And once we have this report, we're going to proceed with the design of the rehabilitation project.
Did we do this with El Granada tanks 1 and 2 and 3?
We did not.
And they're small, significantly smaller, but.
They're significantly smaller. I think we'll do the district had in about 2002, I think it was, sort of an overall seismic vulnerability study done by another consultant. Well, it was a much more of an overview study, and that didn't identify in particular any problems with the tanks. But as we rehabilitate these tanks, I think it's important for us to look at each of these, to look at them in a little bit more detail. And so we did not do that for El Granada Tanks 2 and 3. We will do it for El Granada Tank 1 and subsequent tank
The
rehabilitations.
wider they are, the bigger the slosh risk, because the water, it generates a wave across the tank, whereas when they're tall and it's much less of much less of an issue. But big time, when you get them out like that, they get really serious.
Comments? Any other comments, questions?
I move we approve the proposal to obtain the seismic analysis of the Ritz, currently called Alves Water Tank.
Second?
Second.
Okay, take a roll call.
Aye.
Director Reynolds, President Coverdale?
Aye.
Director Glassberg?
Aye.
President Bowman?
Yes. Okay. All right, next item on the agenda is the quarterly financial review. Mary, you want to take us for a spin there?
Yeah, well, I'm very pleased to report on the good state of our finances mid-year. We are ahead on our revenue by a little over 400,000. With our water sales are up. About half of the increase in our water sales comes from residential customers. The other half comes from ag and irrigation. So I think, on that front, the ag and irrigation, part of it may be timing. But in terms of we are up. We also had an increase in our property tax receipts. So our expenses are under plan by 614,000. So our water purchases, despite having an increase in water sales, we're under budget by 283,000, which is great, and that's largely because of we're getting we're using our local source water, both using our from Denniston and from the wells, the Coastside wells. So we have a small saving in electricity. Our personnel costs are below budget because of our we have an open position, and also with Dave being on a partial service retirement. And then, we have had lower legal and engineering and financial costs. And then we have some timing, issues, or timing, so we may see some higher costs later on in the year. But all in all, we are in very good shape. So, do you have any questions?
So our current reserve, without going back, where are we in our current reserve, and where did we expect to be at this point?
We are, we do have some interest payments and things, but we are, our current account balance is, about 4.9 million. And I expect that we'll be in that range, at the end of the year.
End. And we're shooting for 6, is that what?
Well, we were shooting for
target
this
was?
range for the
I mean, in
this
2
end of
years
this
from
year,
now.
in a couple, yes. So we're in good shape, and as we're looking.
We're meeting
you know,
target, is that?
Right, yeah, for 2 years from
Close.
now.
When we were looking
Yeah.
at the graphs last year, we, in terms of what we'd like to be is more in the 6 range, but this is,
We're getting there.
we are in good shape.
Good work.
That's good news. Other comments?
I think it's great.
And actually, the only other comment I would make on revenues is you did the rate increase that we did float this year. I would say we did a pretty good job of nailing where it needed to be. If we're $402,000 above what was budgeted, but 340 of that is additional sales, which we can't anticipate. So we really came in just about right with our rate increase then. So that's good.
Other comments? Our water revenue's a little ahead of plan, right?
Yeah.
We had some good months in
I will.
in October, November, were pretty higher than planned. I think we didn't get a lot of rain those 2 months.
No, we didn't
right?
get,
Last year, we got a lot of rain in those months, right?
Right.
So now that we're getting more rain, there's some potential, we may see it go down, to norm. It might be on plan going forward for a month or so. or 2.
Correct.
Okay, so we're ahead now, but there's no guarantee that we'll stay ahead with the sales. All righty. Any other questions, comments?
No.
All right. We don't have to vote on that one, right? Okay, the 2018-19 budget process timeline. Mary, you wanna-
So this time of year, we start publishing our timeline of how we're going to move forward over the next 6 months in terms of putting together our budget together. And so we are, our game plan this month is that we're going to have this special board meeting on the 17th. We'll have a finance committee meeting on the 29th and the facilities meeting on the 31st to discuss the O&M and the CIP. Our game plan in this whole process is that we finish with having our rate hearing at the June board meeting. We are planning to have a special meeting in the middle of April, given schedule conflicts we already know with board members, that at the special board meeting, we'll have we're tentatively looking at doing the budget workshop, and then at the end of this meeting, we'll vote on the 218 notice. So that we can, and so that will help, with doing this on April 16th, we will we'll meet our notice requirements.
Mary, Mary, the facilities committee meeting, we've got January blank.
31.
31st.
31st. I could have sworn we
Yeah.
had,
We just set it up, but this was done before.
there it is, yeah, it's on my calendar, 31st. Okay,
3:30.
so I got that one. All right.
Okay.
And then finance committee's not me.
Any other comments?
Draft.
Okay, so we see what the roadmap is. And now we'll start
13,
taking the ride.
regular meeting.
All right, next, we'll go for a ride.
So
Train is leaving the station.
The last one just ended, didn't it?
Train is leaving the station.
April 16th is the next
looking for a
sort of
navigator.
non-standard one, right?
You're gonna have a conductor and an emergency brake guy
Yes,
and pull a brake cord.
yeah.
Okay, Dave's gonna guide us through the Coastside, yes?
What time is the April 16th meeting gonna be? Do we do that in the evening?
I would say that would be during the day.
Usually we've done it in the afternoon.
In the afternoon, like, yeah.
3
Afternoon?
o'clock-ish.
Okay.
Usually 3, that's when they normally are.
I think.
Okay, so
In
3
case it
o'clock,
runs a
all
little
right.
longer. Okay?
Sooner we get it on the calendar, the better it goes.
Coastside County Water District Board Committees.
This is an exercise that we do annually at the January meeting. The appointments to board committees are the prerogative of the board president. So at this,
Up to me.
the staff report, which should look familiar to anybody who was on the board last year, outlines the purpose of each committee, and the page at the end of the staff report identifies the current members of all of the committees.
Okay, I reviewed this, talked it over a bit with Dave, and my opinion is that we have the right committees, and I think the right people on the committees, unless there's anybody on any of the committees that feel like
No.
they're the wrong person.
Thumbs
on
up
the
from me.
committee. So we leave all the existing committees and membership in place. However, we do have one committee vacancy, the Montero Water and Sanitary District Committee, Mutual Interest Committee. And when I was looking at the present assignments, I figured that one of the things to even out the workload and maybe get some other people engaged was I'm going to ask Arnie Glassberg to join me on the Montero Water and Sanitary District Mutual Interest Committee. Why don't you look?
I serve at my leader's discretion.
Okay.
Just remember paybacks, however.
Yeah, he's already wanting to set up the first meeting. So. No, we'll go offline and we're going to talk over things that might be appropriate
Little history.
discussion topics going
Yes.
forward. Any other comments or questions? So with that, we'll, no votes required, right? No.
Nope.
My discretion. Hey, I don't have discretion for it. Number H.
It's your prerogative.
Huh?
It's your prerogative.
Yeah, my prerogative. Okay, appointment of CCWD board member representative alternates to participate in the San Mateo Local Agency Formation Committee, LAFCO, election of officers. Dave, you want to just give us a quick update on that?
Sure, this is also an annual exercise. Our presiding officer is the presumptive participant in any LAFCO nominations and votes for the special district representative on LAFCO. If we'd like any other directors to be alternates in the event of the presiding officer's unavailability, the board can take action to identify all of the other directors as alternates, and that's something we've done each year.
Yeah.
So if you just make a motion to appoint all the board members as alternates to participate in San Mateo Local Agency Formation Commission election of officers, that would be the action needed to do that.
So there a motion?
Yeah, I'll make a motion that all the board members can be alternates in the case that they're needed.
Second.
Perfect. Aye.
Roll call.
Vice President Coverdale?
Aye.
Dr. Glassberg?
Aye.
President Trump?
Yes. Okay, next on the agenda is general manager's report.
Okay, I only had one thing to bring up. Somebody asked, I think maybe a couple of people asked, at the December 12th meeting, what's the status of recycled water? There isn't much to report, but I'll remind you that at the July 11th, 2017 meeting, we reviewed the status then. At that point, in June, the Sewer Authority Board had accepted a finance plan for recycled water, and they had completed 25% design. So they identified what they were going to do for the design and how much it was supposed to cost, and we went over that. The numbers didn't really match the amount of funding that had been put on the table, and the board provided direction to staff to pursue a meeting with Ocean Colony Partners, and probably in the reverse order of importance, also pursue a meeting with SAM staff to start negotiating an agreement. We've been saying for years that the next step needs to be to negotiate a detailed agreement based on the guiding principles, which also say that there wouldn't be any design or construction before a detailed written agreement had been developed between SAM and CCWD. So that's really the next step. And after that meeting, I spoke with SAM General Manager Beverly Marshall, and there hasn't really, our meeting was on, I think, July 11th. I think it was on July 12th that the city of Half Moon Bay filed suit against the other members of the sewer authority. And so they've been pretty tied up with that activity, as well as with their spills and some other problems. So I don't think recycled water has come up at their board at all. And certainly the general manager hasn't gotten any authorization or direction in negotiating an agreement with us. So there hasn't been much movement. I do think that the preliminary design they did gives us an idea of what volume and quality of recycled water SAM could be expected to produce if we can ultimately develop this agreement. So I think we'll probably be back to the board within the next few meetings with some ideas about how we might want to pursue our end of what we would do with the recycled water that the sewer authority could produce once we have an agreement with them. So that's a long-winded way of saying not much has happened. And I think we can expect, given the sewer authority's focus on getting through their current issues, that it'll be a while before they're ready to, that's just speculation, before they're ready to really sit down with us.
Did we ever connect with Ocean Colony Partners to see if they're willing to do anything other than what they contribute to the shortfall of funds if that's so required?
I don't have an answer to that. I've talked with Ocean Colony Partners, but I don't have a specific answer to that question.
Okay.
I think it's more complicated than that. I think we'd like to find a way to make it work. We've always known, I think, that the amount of money they say is the maximum isn't going to cover. And we don't know that indicates the project won't be feasible. I think how we structure the project and the benefit it brings to sewer ratepayers, water customers, will determine the extent to which the agencies involved are in a position to put in, what it takes to do the project beyond what Ocean Colony is willing to pay. So I don't think, we could ask that question, but I don't think that'll tell us whether it's worth it proceeding with recycled water. There's really a strong desire to make recycled water part of our water resource picture, and it'll be worth future conversation.
Okay, so there's been some discussion,
no.
but it's not,
Yeah.
there's no resolution on that particular
Right.
item. Pursuant to other things that you want to look into and share with us.
Right.
Okay, understood.
Well, who knows what the construction picture will look like if and when we get to a point where we're actually sticking a shovel in the ground, but it seems to me that, or I guess the question I would have is, the estimates of the cost of the project at the 25% level, is it realistic to think that that's the way it's going to come in, or is it more realistic to think that everything's coming in higher now? And certainly will while the economy is strong and contractors have work. And in 2 years from now, who knows? But whatever number we figure, it seems to me that we might want to be a little suspect of the number that was generated 6 months ago, just based on the current construction climate.
Yeah, I think we could agendize this topic for a future meeting and go in. One of the things that came out of our strategic planning session last March, seems like just yesterday, was the board's desire to talk about overall water resources. And I think the question of recycled water is a major part of that discussion. And that's what we'd like to take up with the board. So I think there's an opportunity. I'm not sure it's going to look exactly like the project we've contemplated so far, but it's something that we should talk about, and we can answer those. I think we can answer those questions as well.
Comments, questions? Okay, thanks for the update. We'll look forward to the future session on more insight into the issues there. Assistant General Manager report, Mary.
So we received a nice Christmas present from SFPUC on December 26th. They basically came out that they're not going to increase rates to us in the next fiscal year. We will get to see the projections for future years at the February meeting with SFPUC. But, so that's good news.
What we were anticipating that, right? Hoping
We're-
for it.
Yes, yes.
And aren't there some future years out where the rates are going
Yeah,
up
it
because of
just-
the bonded indebtedness on the WISP project?
Yes, I think that the next year.
Yeah, so we don't want
Well,
to get too cocky
we-
here.
Yeah, no, yes. But at least we know that we're on track,
Yeah, good.
so.
This is in a trend. Okay?
Okay. Second item, our leak adjustment policy. Director Reynolds brought up at the last meeting, he inquired about our, what kind of, do we give some kind of adjustment for customers with high bills? And so we pulled out the resolution 2006-23 that outlines our leak adjustment policy. So, with this policy, we give residential customers up to $500 if, for an extraordinary water pipe failure. We don't give leak adjustments for toilets and irrigation issues, but, for extraordinary pipe failures beyond the control of the customer per our policy. The one point with this is that we are going to be implementing Water Smart in 2018, and so that can help customers, see their water usage and help detect, help them to detect leaks. So, we're hopeful, that will, that our customers will look favorably upon that. It is, it is very difficult. It's hard when a customer gets a high bill. But this is a little something that we do.
Do we have some kind of estimate on when we might go to monthly billing in terms of time?
Right now, and, my next item is that we're targeting that we're gonna have our meters in, by March. So we need a few months under our belt, with the new meters to make sure things are working correctly. So I would, I'm hoping possibly sometime in, the third or fourth quarter of 2018.
Good.
When our financial year starts, June?
July.
July 1st. I mean, it would be.
Can we make it for the July deadline? Wouldn't that be a clean time to switch?
It could, for our customers, yes. For us, it's, there's lots of, if we're changing rates and it's.
Why are we
there's some-
changing rates? We're just
Every year.
taking.
Just our rate adjustment.
Yes, but this, to me, this doesn't have anything to do with rates. This has everything to do with just sending out a bill every month, right?
Well, you would be looking at, let's say, our base charge, we would cut it in half.
Right.
And so.
I can help you with that. I'm good at dividing by two.
No, but there's a lot of systems issues that we have to be, we have to be thinking about. So, I mean, it would be great if we could do that, but there are some complexities with implementation, so.
I guess from my point of view is we put a huge amount of money into the meters. And I would be a huge champion for as soon as we can do something as beneficial as switching. And I'd love to see it happen before the summer season starts, because that's when people really need those bills. And it seems like if we could work towards that, I would be a champion for that.
Okay, we will.
Well, you should look
Take
and
note.
see what it would take to do that, basically.
That's not going to happen. I don't see that, I can't see that happening. I mean, if you, consider the fact that we send out something on we have 5,300 residential accounts. We have a lot of monthly customers already, but basically instead of 5,000 bills, we're going to be generating 10,000 bills.
Right.
So, over the same period, 10,000 bills every 2 months, or now it's 5,000. So, There are a lot of work, I think Mary's right, there are a number of workflow issues we have to
That's what I meant,
get through in the office. So it isn't a simple switchover. It's we have right now kind of a batch process where we do all the readings and we generate all the bills. Whether that's going to work for monthly bills or not, we don't know. We're not sure that we can handle that level of,
Batch.
the batch, because every batch, there's a lot that goes with the billing. Now, some agencies have like a continuous billing process where people get billed monthly, but there'll be bills sent out every week or
every
something
week,
like
yeah.
that. So we may have to go to something like that, and that would be a
Yeah.
big switch. So, the workflow considerations are very significant for us, but we'll have that capability, and a lot of the benefits that that our customers would be looking forward to will still be available, even though we haven't gone to monthly billing, because they'll still be able to access WaterSmart. We will, at some point in 2018, we're also going to roll out the customer portal for WaterSmart, which will allow them to go in, look at their use, set alerts for high use, things like that. So they'll be able to use some of the tools that have been available before we go to monthly billing. Anyway, I don't want to create any unrealistic expectations that we can get to monthly billing quickly. I don't think we can.
The whole process of doing this, is it a phased process? Can you start cutting people over the monthly? It's all or nothing, it's one
No.
fell swoop. I'm just asking, I'm
We-
trying to.
I mean, there could be phasing, but I think we need to work through the
Okay,
workflows.
so maybe what we're really asking is, it doesn't look like it's going to happen at the beginning of July. Maybe as time goes, you can lay out maybe a little roadmap for us to show us what is involved and what you think a viable schedule looks like for our review, that's all. I'm thinking, I gotta believe that they're telling me that this is not a walk in the park, and I can understand it. It's taken us, 11 years to get here? And I figure an extra few months is not gonna break the bank at this point. I mean, it's been a long, hard slog, and we've made a lot of progress in March, maybe April, because they might not finish in March exactly
Yeah,
either.
exactly.
There's all kinds of things. And so I'm willing to be reasonable and see what you can show us that makes sense. And then we'll know what to expect. It's an expectation issue as much as anything else, I think. Now, if you say 10,000 bills, 5,000 a month, does that double our expense for mailing and all that kind of stuff?
We do have, there will be some expenses.
No,
We are
it's
trying to
gonna cost more to
we
do
are
this.
trying to move our customers to
Electronics.
electronic
Yeah,
bills
okay.
and things.
But there's cost for doing this as well. Okay, so we're going to get there, and they take a little longer than,
I'm good.
okay, just checking. No, but we just want you, there's a lot of interest in
Oh.
doing this, because this is what we've been advertising and saying, and we got to let people know that they'll have the WaterSmart thing at least, so that's one step in the right direction, followed later by the billing.
What is our schedule for the WaterSmart portal?
Well, again, we want to, we need to get.
But they're separate, aren't they? The monthly billing, the monthly
No, no,
billing
they are-
is separate
yes,
from, yeah.
yes.
So which one's gonna happen? Which is the higher priority, and what's a ballpark timeline for the water portal?
We're hoping sooner, but it is, right now, we're still working through the mechanics with our utility billing software, so we haven't
Not yet.
gotten the prototype up yet. So, once we see that, we'll have a better idea of timing. We are, cautious, right now, we're saying, third or fourth quarter of 2018, but we may have customers, that we could pilot earlier. We're
Put me down.
so, yeah,
Okay.
so we are, I think we'll know, I'm hoping that we'll know more in the next month about what we can expect.
Well, I'll be happy to see the meter swap out finished. To me, that's the priority at this point. If we get them all done, I will consider that a major milestone in our recent history, don't you think? Yeah. do that, and we've really made a step. The next two will be coming after that, but I think that's the good news coming in March or April, right? Okay, well, go for it. Okay, other stuff on the meters?
I think that's it. I mean, the only thing with actually on James' report, we're making steady progress, so, and he put numbers in his report from last week, but we're moving forward. And we have a larger crew out beginning this month, except it's been raining, so we got behind a couple days here.
My observation was that the crossover on the billing between pre-meter and post-meter, between old and new was seamless, at least as I
Yeah.
saw it.
It should.
Since I'm one
yeah.
of the ones, looked like it was right on the money, so that went well. As long as we swapped, and I could tell whether it was a seamless transition, and it appeared to be, to the new one, so good news, worked well.
Thank you.
Good evening, board members. James Durbin, your Superintendent of Operations. Monthly highlights, Denniston again is a shining star. We did 198 million gallons last year, and I've also listed our previous achievements for production from that facility, so I just wanted to highlight the payoff of the investment there at Denniston continues to pay off. We did a filter surveillance today at Denniston, and basically we're just assessing it's required every year that we look at the filter depth and inspects the spray wash, and of course our staff was suspicious about one of the filters, and the filter wash was actually leaking, so our suspicions were correct. Denniston Pump Station, we're working through the vibration problems there. We have bolted down the sole plates of the pedestals, and the contractor has regrouted. We're going to let the grout cure, and we're going to reconduct vibration testing and hopefully get that project closed out.
How long does that take, the curing process?
48 hours.
Oh, that's quick. That's good.
And I didn't know how Sean predicted the storm and got the filter surveillance going and the grouting, and it was perfect. It couldn't have gone better. So those things don't happen in operations a lot, so I'll give him credit for planning that well. Automatic meter infrastructure. As of last week, PMI did 1,701 new meters, and also staff over the last couple of years, I believe, have done 1,025 meters in-house. Downtown
In-house,
2-inch.
that means in-house people have
Us,
done that.
yes.
They're not all in the back of the building here somewhere.
No, they're home resting. They're tired from all the meter installations.
Very well metered here.
District staff is what I
Only
mean.
way to get them on monthly billing.
So that makes a total of 2,725?
26.
26. And we got a
As of
total
last
of,
week.
what, 6,000?
7,500,
7,500? So about one quarter?
1/3.
1/3.
Well, it's going well. Let's keep up the good work, then. It's great.
And we're working on encroachment permits with the city of Half Moon Bay for the downtown 2-inch project, so
Oh, great.
updates next month.
So,
If you have any questions, I'm here.
Any
I can't
questions?
remember whether it was the last board meeting that issue of encroachment permits came up, or how they've skyrocketed in costs with the city of Half Moon Bay. Was that in the finance committee meeting that we talked about that?
50-something, yeah.
They've gone up to a huge amount. So when that happens, how does that affect our bid? Is that like a change order or something that has to go through?
I
or-
think that's to be negotiated with the contractor.
Well, the
I would think we
The
pay the
Permits
encroachment.
and
The
future
contractor, our terms normally put the responsibility for obtaining and paying for the encroachment permit on the contractor. In this case, the costs so far exceeded anything that we'd ever seen before that we expected. We'd probably entertain a request from the contractor to compensate him some of that. But it's a cost that the district bears and passes on to, like every other construction cost, passes on to our.
So we can have a cost of service for the Half Moon Bay City Hall, et cetera, since it costs more money to provide them with water, right?
Well, they're a public agency with concerns like ours. They need to try to fund their operations as we do. We're working with them. I don't think the cost of their encroachment permit is a big issue. $17,000 on a $750,000 project is not a huge burden. I think everybody in the city of Half Moon Bay would like to would like to have better pavement. I know that's one of my concerns, and that's one of the main things that they do in encroachment permits, trying to manage their pavements and traffic and all kinds of other concerns that city residents have. So we don't have any objection to the goals that motivate their encroachment permit program. And we don't really have, the costs of that are up to them. It's based on a fee study they did last summer. It just kind of took us by surprise on this project. Where we need to improve our working relationship with the city is getting up with all these, they're really putting detailed requirements on the contractor that we haven't seen before, for elaborately detailed traffic control plans and things like that. So it's delaying our project and delaying the contractor, and so we need to work, we need to find ways to work better with the city staff on things like that. We have, for the last 70 years, I guess, worked in city of Half Moon Bay streets and have been a good actor. We do everything to very high standards. We comply with whatever they want. So, this, of course, there's, people change at the city quite a bit. So there are a number of new people that haven't worked with us and haven't built up the kind of, we build up trust with somebody and they move on. So it's just a process, not a real. I don't think it's a big issue. We'll get
And my comment wasn't so much to pass judgment on the amount of the encroachment permit, because I certainly don't have the expertise to determine whether it's appropriate or not. That's the city's issue. But I was just wondering how that passes through, whether it's something that we.
Yes. It's our project cost,
pick up.
and it would be included in the contractor's bid.
Thank you.
Okay. Kathleen.
Now, this report's pick it up, isn't it?
You know it's the end when I come up here. Tidings. So my report's very simple. Just wanted to give you an update that the Department of Water Resources has accepted our urban water management plan from 2015.
Did they read it?
And it did come to dawn on me as I was listening to our auditor speak of how we don't get any smiley faces or good job. We just it just says it met requirements and it's been accepted. So,
Good job.
good job.
That's it.
It wasn't right.
face.
Yeah. Big job and a good job. Thank you.
Do we have any
We're in the same
confidence
boat,
that
huh?
anybody actually reads it up there?
If there's a
That's,
problem.
yeah, I don't know if they read every word, but they like to look at the data tables.
Look for
and
elements.
Elements,
They
yeah.
got it on the 27th of September 2016,
Yes.
and it was accepted on December 15th,
The
2017.
slow readers.
They must have a lot to read. So it's-
Well, in their
There must be a lot
defense,
in the queue.
there's been a lot going on, the drought
Oh, in
and,
the Orville.
yeah, so you can imagine that,
But they got to it, and
They
it's
got to
been
it, yeah.
okay. And we have what?
It's good news. We have a few weeks before we have to start the next
The
one.
next one, that's what I was just thinking.
How many years to the next one?
2020, every 5 years.
every 5 years,
So we got
yeah.
to start the new one pretty
Yeah.
soon.
Pretty soon, we're actually, Bosca, and we're already talking about planning.
Good
for that,
job, good job.
Yep.
Smiley face.
Who reads the rainfall reports now? Who takes care of logging that in?
James.
Do you do it, James? How many inches of rain did we get in this last storm?
I did not look, but
I have,
I could go look and come
I
back.
measured.
Yeah, would you? Do you
I
mind?
measured 5 in my backyard in
Whoa.
January
Yeah,
so far.
Yeah, we had
Five.
four, we
So
had
far.
4.5.
Promise I'll come
I
back.
think we
Oh,
got
thanks.
4. I think
Sorry
we
to
got
ask
4
you.
in the
Thank you.
last-
In this storm?
Yeah,
Montero.
4.5
I had
inches.
1
At
and
your
then it
place?
was
'Cause the
5.
Montero gauge was about 3.5, I think,
Oh,
I
was
think
it?
we got,
Yeah.
I think we got 4.
yesterday.
Yeah.
The
This
one
last
one
storm.
day.
Could be, it was a lot.
A lot of water in one day.
5
Yeah, it was
inches,
unbelievable.
5 inches.
But it fell gradually over
No, it was such
over
a-
like 20 hours. So
Right,
it
no,
wasn't-
it
It was
was
so
at
intense.
least 4. They talking about 1.
An amazing
two,
rain.
so
Really
It was
amazing.
good.
Made up
And no
for
snow.
December a little bit.
Huh?
Made up for
And no
the-
snow.
Oh, yeah, you
There's
just,
more coming, they
well,
said.
that's because you're down low,
Next
you
week.
gotta go
There's
high.
more coming. Any other
Gotta get high, buddy.
items, any requests for the next agenda?
Nope.
Hearing none.
3.9 inches.
Yeah,
Well
almost
done.
4
Right.
inches, yeah.
Perfect,
How's
okay.
that? My meter's not bad. This
Yeah,
little
we-
plastic thing.
Yeah, we had 4.5.
It's amazing.
We had 4.5.
All right, well, with that good news, we'll,
Adjourn.
8:30, we'll adjourn the
Thank you, team.
January 9th meeting. Thank you.
Great job. You're a really good president.